Good afternoon, traders, and happy April 25th, Saturday, April 25th, and welcome to our live weekly stock market episode. This is episode 4. Before we get into our weekly episode, make sure to join our live trading community. We do host a live trading show on YouTube as well. That's live at 9 a.m. every morning. So to get the most out of this channel, what you want to do is join that live program. Join us for the pre-market program. If you can hang around for long enough, join us for the live trading portion of the program, and then you can take advantage of some of the resources our community offers. So make sure to take advantage of that. The sale ends at the end of April. So let's get right into it, guys. Yes, last week was a wild week. Bulls came in, they established control. We pushed price all the way down to that 510 territory. We end up getting price all the way back up to that 550 territory. We continue to accelerate, and we'll unpack that and see where we go from here. But before we try to map out a path where we can go, we need to know where we were last week. So let's get right into it. This is our weekly recap and weekly outlook for next week. So first things first. Good afternoon, retired Fido. Got to be bullish in the poll if you're showing the bull on the screen. Yep. So last week on the thumbnail was the sleeping bull. Now we have this bull. Right, waking up. So let's see if this is legitimate, right? We'll dive into it and let's see what the data tells us. So let's get right into it. So this week, the Dow was up 2.5%, S&P up 4.6, Nasdaq up 6.7, MSCI up 2.6, 10-year down 0.1, oil down 1.2, and bonds were up 0.7. So the primary thing we're keeping an eye on is the year-to-date performance, right? We know we're still in the red. We're still in the negative on the Dow, on the S&P, and the Nasdaq, but the red with the negative is significantly decreasing. At one point, Nasdaq was down 20% plus. S&P was down 20% plus for a couple of days, and the Dow was below 15%. And now we're back in the single-digit territory, right? So we're about a couple of strong days to the upside on the Dow and the S&P to really get back above or get back to flat on the year or even potentially go green, right? So significant improvement, but we can see MSCI, that's the international markets excluding the US market. So everything excluding the US markets is still up 8.4. At some point, this was double digits. We can see money slowly starting flowing back into the US markets. If we take a look at the sector's performance on the week, the sector performance, the biggest winner was tech. Standout was tech. Tech was up 6.5%. Right behind that was consumer discretionary and communication services. So when you think of the Magnificent Seven, when you think of Nvidia, when you think of Amazon, when you think of Tesla, when you think of Apple, when you think of Microsoft, when you think of these large names, Google, Netflix, right? They're all in the tech, consumer discretionary, or communication services sector. So when those Magnificent Seven start really moving, these sectors really benefit. So we can see the benefit of these sectors. But consumer staples, right? Consumer staples were down 1.26%. Real estate was flat, 0.35%. Utilities was flat, 0.87%. But the biggest takeaway is technology was up 6.5%. If we take a look at the weekly heat map, Tesla's up 18.5%. Right? A lot of people are not paying attention to Palantir, guys. Palantir is actually up 20% and back above that 100 psychological level. Apple is up 6%, Google was up 6%, Meta was up 9%, Nvidia up 9%, Avago up 12%. So the entire semiconductor space really experiencing that boost, with ADI leading the way, up 10%, MU, Micron, right, up 15%, AMD 10%. So the usual suspects, the big dogs, the big boys, are really taking charge. Lilly up 5%, the entire XLF, all the large names in XLF and the financials experienced a nice gain. So the corner of the market that was really lagging was consumer staples. We had some names in energy, a couple names in healthcare, but overall, the usual suspects, the ones that carry the market, were up. All of them were close to being up double digits, and that was a strong sign of strength. So if we take a look at the economic calendar for the week, on Tuesday we kicked things off with the Richmond Manufacturing Index that came in below forecast and below estimates. On Tuesday, FOMC Waller was speaking. On Wednesday, FOMC Waller was speaking. Then we went right into the PMI, manufacturing PMI, that came in above forecast, above previous estimates. Right after that, we had the flash services PMI that came in below forecast and below estimates, and we had new home sales that came in above forecast and above the previous reading. And on Thursday, we had unemployment claims that came in line with the forecast and slightly above the previous reading. And we also had core durable goods on Thursday that came in below forecast, below the previous reading. And durable goods came in above forecast, above previous reading. And existing home sales came in below forecast, below previous reading. So if we take a look at the home sales data, so we're getting more new homes being sold than existing homes. But the biggest thing here, guys, is if we take a look at the fear and greed from 2 weeks ago. 2 weeks ago, we were at a 4. So during the time when we had the tariffs come into play, when the tariffs took effect, when they were effective, and we had the initial pause, the initial reaction to the upside, we came back down. If you're a day trader, you seen that activity. And then we actually had the legitimate news where we're going to get the pause. So we were at a 4, right? This is historically low levels on the fear and greed index. So there was a ton of fear and a ton of pessimism. And the last time we were this close was the last time we were this low, or we were below this level, was during COVID when we were at a 2. So look at the difference in 2 weeks. Okay, so in 2 weeks we went from a 4 all the way to a 35. Does that mean we're in the clear? No, it doesn't mean we're in the clear. But what it means is there's less fear in the markets, and there's a little bit of optimism, and we can see if the bulls and all the buyers and all the hedge funds can step in and take advantage of this optimism and continue to push it, right? The market basically operates on psychology. We all know that, right? So when everyone starts getting their confidence, or the market gets its confidence, and we get a couple of headwinds in our favor, right? Especially with the looming tariff deal. If we ease up on tariffs and it becomes official, right, we can see this thing continue to push potentially into the neutral territory, right? So very impressive recovery, very quick recovery. It only took 2 weeks. So the one chart I want to bring to your attention is this volatility chart. So this volatility is comprised of 2 things. We have the volatility index right here. That's the VIX, and we have the Bloomberg Trade Policy Uncertainty Index. So the primary thing is I drew this blue line to let you know that once we were above these levels, that told us the volatility and the trade policy uncertainty index completely skyrocketed. They skyrocketed, and we got some relief when we had the April 9th pause, right? April 9th pause, we got the pause, we started to, the volatility started coming back in, the VIX started coming back in, and now we are back below the lows, and we're quickly approaching the same level we were on April 2nd before the tariffs were announced. So a significant decrease in the volatility and a significant decrease in the uncertainty index, right? So that spike, we're giving it back. We're back below the levels. So really interested to see how this plays out in the coming weeks, right? So less volatility, less uncertainty. That's reflected by this Bloomberg Trade Policy Uncertainty Index and the Fear and Greed Index, right? We got to track multiple things. So another chart I want to bring to your attention, right? We've been paying attention to this a few weeks at a time. So we've been checking on it here and there on our weekly recap. And this is the domestic stocks in comparison to international stocks. So we have the Magnificent Seven. They're still down 16% year to date. Small caps down 12.4%. Mid cap down 8.9%. S&P down 6.8%. And then if you can see the investment grade bonds, they're up 2%. Emerging markets up 4.2%. International developed stocks up 10.6%. So there's a lot of money in these 3 categories: investment grade bonds, emerging markets, internationally developed stocks. So if we get some relief, guess where the money's going to flow? This money from here is going to start flowing back into here, and more than likely it's going to start flowing sequentially. It's going to start flowing in this order, right? It's going to start flowing in this order, right? If we put this in order, going from quote unquote safest to riskiest, we know S&P is significantly quote unquote safer than mid caps and small caps in the Magnificent Seven. Although the Magnificent Seven make up a good majority of the S&P, we know that the S&P is safer. So if we start pulling back here, guess what? We're going to get some money flowing into the S&P, the mid cap, so on and so forth, once this uncertainty about the tariffs cools off. Right? So that's the primary thing that's really pulling us back, guys. Nothing changed. As far as we know, nothing really changed in the economy from 2 months ago till today except the uncertainty. So all this is about uncertainty. So the next chart I want to take a look at here is the Fed and their likelihood, right? This is just expectations, right? Their likelihood of cutting rates and their path to cutting rates. So the current rate right now is at 4.3. So the next meeting in May, they're looking to keep it at 4.3 and start pushing it lower into 4.2, 4.40, 3.8, 3.6, and 3.5. So the closer we get to that zero number, right, the cheaper money becomes, and we get back into being in a hyper growth environment. Hyper growth environment, you can go back and see how stocks performed when we had QE in place, quantitative easing, right? You saw stocks completely go on a massive run, right? When interest rates are low, money is cheap. A lot of these tech stocks can really borrow money for pennies on the dollar and really expand, and that gets reflected in their stock. Their stock significantly increases. So we'll continue to pay attention to the roadmap the Fed takes to get us back closer to that 2.5 target, right? But we'll see. So we'll see what takes place. But the more, think of it like this: the more perceived damage the economy or the stock market takes from the tariff announcements or the uncertainty it has, the more pressure there is to cut rates on Powell, right? So the administration more than likely wants the rates to get cut, right? They want the rates to get cut. If the market recovers to a certain point and during the next meeting, there will be no reason to cut. But just say if we handed the markets in the conditions we were 2 weeks ago to Powell, right? In that exact condition, we were trading at that 480 territory. Guess what? He has no choice but to cut. So really, really interesting to see where we hand the markets, what level we hand the markets to when Powell is speaking and when he has to make that decision, when the Fed has to make that decision. So this is the roadmap to the rate cuts. And going into this week, so that's everything in the past. So this going into this week. Going into this week, on Tuesday, we have JOLTS. So we'll go over the red folder events on Wednesday. So mark this out on your calendar or take a screenshot of this. This is on Forex Factory, right? Make sure you have that in your bookmarks and are constantly checking it. Before you take any trades, make sure you check this calendar before you start hitting any buttons. So on Wednesday, advanced GDP, and that's pretty significant. Employment cost index. We have core PCE, the third piece of the inflation picture. So CPI, PPI, PCE. That's all on Wednesday. Thursday, we have unemployment claims, ISM manufacturing. And Friday, we have average hourly earnings, NFP, non-farm employment change, and unemployment rate. So this week, we're in the middle of earnings week now. This week, on Monday, we have Waste Management reporting earnings. We have Domino's reporting Monday morning. Domino's, absolute terror for the past 10 years. Just think of it like this. Domino's is a tech company that sells pizza. Okay? So Waste Management on Monday, Domino's on Monday. Tuesday, before the open, we have SoFi, PayPal, UPS, Coca-Cola, JetBlue, Pfizer, Spotify. After close, we have Visa, Starbucks, Snap. So I decided to go with Starbucks for our earnings call. So make sure to tune into that, the Starbucks earnings call. On Tuesday, we'll be covering that. On Wednesday, we have Caterpillar, ADP before the open. And after the close, we have Microsoft, Meta, Robinhood, Qualcomm. Right? So it came down to Microsoft and Meta. So I went with Meta because of course, Meta's CEO is more known. So I went with Mark Zuckerberg over Satya Nadella because he's a little more known, a little more popular. Thursday, Lilly, Roblox, CVS, MasterCard, and McDonald's. So if you want to get a good feel of consumer spending, you got to pay attention to the Visa numbers along with the MasterCard numbers, along with the SoFi numbers and the PayPal numbers. So that gives you a good read on consumer spending habits and what kind of forecast those four companies may provide, right? So right after that, after close on Thursday, we have Amazon and Apple. I went with Amazon, Airbnb, Reddit as well. And on Friday, we close off with ExxonMobil, Fubo TV, and Chevron. So keep in mind all the names that are reporting earnings this week. The primary ones I'm going to cover: Starbucks on Tuesday, 4:30 p.m. Wednesday, Meta, 4:30 p.m. Eastern, and Thursday, Apple, 4:30 p.m. Eastern. So make sure to join us for that. If you missed any of the earnings calls from last week, that's available on the channel. So we had Google's earnings call, we had Tesla's earnings call, And what was the other one we had? We had one more, but go check out the channel. Okay, so let's get right into it, guys. Let's get right into the technicals. Make sure to like the video. Make sure to subscribe if you haven't already. Let us know where you're joining from. And people joining the live from the Discord. Right after this, we're going to jump into the Discord. We're going to be live in there, and we're going to go over contract pricing in Greek. So make sure to tune in there. If you can't make it, I'll have that recorded, and you can watch it whenever you get a chance. So let's get right into it. First things first, SPY. We're going to start off at SPY. So the primary thing we're going to do here, guys, is we're going to go over all the instruments. We're going to go over the dollar, the VIX, the 10-year, the 2-year, oil, gold, Bitcoin. We're going to go over the indexes, IWM, DIA, SPY, QQQ, EAF, international markets, right? We're not going to go over the nitty-gritty technicals intraday. We're just going to get a broad picture of what's going on. And then I'll go over some of the individual names I'm paying attention to and a potential swing trade idea I will provide at the end of the program. Okay, so buckle up. So first thing, let's start with the dollar. Okay, let's start with the dollar. This is the weekly chart. So the dollar is starting to bounce, hammer on the dollar. We can see the dollar took out these lows, this zone down here. So the correlation, right, they have a inverse relationship. Or they should have an inverse relationship. SPY and the dollar should have the inverse relationship. But in this kind of environment, they're moving in unison, right? So the dollar is bouncing. It gave up that level down here. This level is from July 2023, September 24, and the dollar is currently at that 99. So obviously that 100 psychological level is going to be critical for the dollar. Let's see if we can get back above that 100 psychological level, and if we can get some momentum on the dollar, more than likely that will trickle into the indexes as well. VIX, we watch the VIX every single day, but if we take a look at it from a higher time frame, just to give us some context, the VIX at some point in time, we were all the way at that level, right? When you look at it from a weekly time frame, the VIX, we've been trading this thing when it was at 60, when it was at 30, before it got to 60, when it was back at 20, we've been trading this thing this entire time, and it's one of my favorite instruments I like to use to gauge the volatility. So a significant decrease in the volatility. How do we know? Look where we were and look where we are. So in relation to where we were two weeks ago, and we're currently at 23 right now, right? From 60 to 23, so close to 35 plus point drop to the downside. So that's a significant decrease. If we look at the 10-year, right, things are starting to stabilize a little bit, right? So now the 10-year and the 2-year, they're right where they need to be. In a sense, you don't want the 2-year to be ahead of the 10-year. That's called the inverted yield curve, right? So when we look at the 10-year, 4.2, okay, pushing a little lower, and if we look at the 2-year, is where the 2-year is. The 2-year is bouncing right off of that 200 EMA. It's currently at the 3.7. So we have the opposite relationship, right? Opposite relationship with the 10-year and the 2-year. So when the 10-year and the 2-year start selling off, that means money is starting to flow back into the S&P, right? We get into a more risk-on environment. If the indexes are pulling back, more than likely money starts flowing into the 10-year and the 2-year. When we take a look at oil is sitting right at 60, right at 60. So where is oil in the grand scheme of things? So oil is trading near Glad your options lesson is recorded in the Discord. Thanks. All the viewers need to join your Discord. Great trading community. Yep. Make sure to join the Discord, guys. If you do see this sometime in the future, most of you view this after the fact, right? We're still trying to build the live audience on this program, but our bread and butter is scalping, but we also want to have a general idea of the entire market. So if you do see this in the future, guys, make sure to join the Discord. Take advantage of the full offerings. So when we take a look at oil, I told you guys that I used to be in the oil field. I was in the oil field around 2015. So that's the time when I was in the oil field. In 2015, at that time, I wasn't paying attention to stocks. What I remember vividly is whenever the price of oil dropped below 50, 60, there was significant layoffs and production slowed down. right? So I remember in 2015, oil fell below 50, and it was significant because most of us were contractors. There was a significant slowdown in production, and a lot of people lost their jobs. So now oil is back at this, from an investment standpoint, right? Oil is back at this 68 territory, and it's near these highs from 2019, right? 2019. So we aggressively rejected here, bounced here, bounced here, bounced here, bounced here. So oil might be something to pay attention to if you are looking at oil long term, right? Everyone is infatuated with gold right now, where gold is slightly pulling back. We'll also take a look at gold, but the people making money in gold were in gold 2 years ago, 3 years ago, right? It's not people fall in love with where things are, but that's you're too late to the party. So keep an eye on oil for the next couple years. All right, we'll see how we personally, I haven't traded oil recently. I don't trade oil right now, but it's something just to pay attention to. We have that downward compression. Let's see if we can hold above that 63, 65 territory and potentially push higher. Naturally, we do have. So when oil pulls back a little bit, the entire market pulls back a little bit. It has to do with production, right? Gold. So gold is essentially a hedge, and gold has been if you take a look at gold's chart, look at gold, right? Gold pushed all the way into 3,500. So if you're not aware, you can buy gold bars at Costco. So a lot of people buy gold bars at Costco and store them. And if you want to sell those gold bars, you can go to, you're probably not going to get the spot price. You can go to jewelers, you can go somewhere else and literally exchange them for cash, right? So right now, gold pushed all the way into that 3,500. Are we surprised that gold continued to show strength and the market was weak, right? No, money was flowing into gold, right? Gold is hedge. So we can see gold is all the way at that 3,500, currently at that 3,300, so about a 200-point pullback. Still clear uptrend. If you're trying to ride this trend, you think this thing is going to continue higher, all you need to do is pay attention to the moving averages. If it respects one of those moving averages, if you feel comfortable with one of those pullbacks, make the decision, do your due diligence, and hop on board. Very, very simple. It's an uptrend. Bitcoin. All right. The way I view Bitcoin is I look at Bitcoin as a risk off and a risk on tool, instrument. So whenever we're in a condition where we're risk on, so more money's flowing into the markets, more people are interested in tech, right? Small caps are moving. More than likely, Bitcoin is moving as well. When we're in a risk off type of environment, people are looking for safety. We're going into the 10-year, the 2-year. We're going into bonds. More than likely, the Bitcoin pulls back. So it's very important for you to understand. I know this might not pertain to scalping, but it's very important for you to understand the micro and also the macro. Over time, when you're a trader, you almost develop a knack and you become a self-taught economist, right? You just learn these different things and you do research, and it's a fun thing. So be very mindful where Bitcoin is. Last week I talked about how Bitcoin consolidated here. I had some consolidation here. Disclaimer, I don't hold any Bitcoin, right? So we made these highs between that 72 and 74. We broke past it, and now we're at that same kind of phase here. Bitcoin likes to move in phases. When Bitcoin pulls back aggressively, when it's not moving, they call it a winter, right? It's referred to as winter. So crypto winter or Bitcoin winter, whatever you want to refer to it. But now we're in that period where we're kind of pulling back. We came into that 200, beautiful opportunity off that 200, downward compression, right? And the correlation between the Qs and Bitcoin is pretty accurate. So if we can get back above this downward compression, we break above it, more than likely we're going to test that 100 psychological level. Pay close attention to psychological levels, and then we're going to get into that 107, 109 territory, 110, and possibly take off. So a lot of things are on the verge. A lot of things are setting up. Now when we take a look at the indexes, so indexes are the Qs, IWM, SPY, QQQ, IWM small caps, DIA is Dow Jones, QQQ is the Nasdaq, and SPY is SPY. These are all ETFs, right? So we took a look at all the instruments. The dollar was lower, VIX was moving lower, 10-year and 2-year pulling back, oil pulling back, gold pulling back slightly, and Bitcoin pushing higher. Now let's take a look at the indexes. When we take a look at IWM fell below, so small caps, IWM fell below that 200 on the weekly. Very rarely do indexes fall below the 200 on the weekly, right? IWM is the most volatile out of all of them because a lot of the names in IWM are not even profitable. A lot of the stocks in IWM, they're growth companies and they're not profitable. They're early stage growth companies. So when we take a look at the IWM, we have that 200 EMA, that 200 weekly EMA. We need to get by at that 196.76, right? Encouraging thing is we did go buy block. Buy block, all the indexes went buy block, essentially an engulfing candle on the weekly. We took out the previous week's lows, and we took out the previous week's highs. If you watched last week's episode, last week I talked about we can see a significant move. And the two scenarios we laid out was we take out the low, three scenarios we laid out. We take out the lows, we continue. We take out the highs, we continue, or we take out the lows and move higher, or take out the highs and move lower. Because we consolidated, now we're breaking out. So very interesting to see if we have enough strength in IWM this week, going into this week, to get past that 196.76, which is that 200 EMA, right? 200 EMA. Are we going to experience some traffic up here, or are we going to just blast past that point, right? Two ways we can blast past that point. We can open up inside this weekly candle. Buyers can step in and we can just organically push past it, right? If we want to bypass that 200 EMA, easiest thing to do is the market for the market to gap up. If it gaps up above it, more than likely we bypassed it, right? So now pay attention to that 200 on the IWM on the weekly. If we look at the Dow did not go 3 up. The Dow did not test that 200 EMA on the weekly. It's trading below that 50. So really, really interested to see if the Dow, right, can take out this weekly candle high. If the S&P and the Qs continue to have strength, more than likely the Dow will do the same thing and take out this weekly high and continue to push higher. So watch that weekly upside breaker on the Dow, right? Pay attention to that, and it has room at that 408.32, which is at 9. And we can see some traffic at that 413, and before that we have that 410 psychological level. So the primary thing on the Dow is pay attention to that weekly upside breaker, so last week's highs, and that 410 psychological level. The pursuit of that 410. SPY. We take a look at SPY. We can see SPY. Right, where is SPY? Let me take off these drawings real quick. Right. This chart looks beautiful, guys. Don't let me influence you. Do your due diligence. But to me, I've seen this time and time again. This looks like it wants to take off. Right? This looks like it wants to take off. As the tariff and the tension is easing, right? We're just one announcement away, or one deal away, or one tentative deal away, something on paper, before this thing takes off, right? So pay close attention to that. A lot of you, I'm pretty sure you positioned yourself here during the candle 2 weeks ago. If you position yourself in this candle, perfectly fine. If you're long term, right, you can wait for more confirmation. If you're holding for 5 years, it's not going to matter if you bought above this 200 EMA, this 50 EMA, or below it. Trust me, right? Entry is not going to matter too much in 10 years. All that matters is you entered. Okay, so very, very important to understand. That's what it looks like right now. So what the data tells us is we're bullish. Our instruments that are supposed to be pointing higher and our inverse of the S&P are giving us bearish signals, right? The index, the fear and greed index, the volatility index, the other indexes we were reviewing are showing less volatility. So naturally, there's a runway. So the probability of us continuing in this direction is very, very high. Everything is probability. So again, on the SPY, I'm going to pay attention to that weekly upside breaker. So make sure to join us while we live trade SPY every single day. And you can take advantage of some of the trade ideas and see how we do it every day. But from a long-term lens, break above this engulfing candle. You can call it an engulfing candle. A lot of times when we have an engulfing candle, this kind of candle, the next candle continues. More than likely, we have a continuation of the engulfing candle, right? So very, very interested to see what takes place. But again, don't let my opinion sway you in any direction. You have to do your own research and your own due diligence. This is not financial advice. I'm just giving you my opinion on my outlook. So SPY, we're trading below that 50 EMA on the weekly. Looks like we're above that. Looks like we're above that 9 EMA. We have that huge gap intraday to fill. That initial gap we saw to the downside, we have that gap to fill. So we got to pay attention to that on Monday. We have to see where we open up in relation to that gap and where we open up in relation to this weekly upside breaker, right? Once we get a clear picture of where we open up, we will know exactly what to do, right? But for now, this week, bulls were in charge. Bulls dominated this week. They were down on Monday and they pushed this thing back for 4 days, right? So we can't deny that. Similar thing with the Qs, same kind of activity, right? Similar thing with the Qs, buy a block on the Qs. The Qs are headed for that 50 EMA. So on the weekly, that 50 EMA on a SPY, of course, the 50 EMA moves. But right now, the 50 EMA is at 557.32. Pay attention to that, right? 557.32. Pay close attention to that. Take a look at the Qs. 50 EMA on the Qs. 477.80. So pay attention to that. If we get above those levels, right, this can be on. And the one thing you will start seeing is when buyers step in, what ends up happening is there's this thing called FOMO. When something starts moving, it starts moving faster at an accelerated rate because more people start jumping in. More participants start jumping in, right? So very, very important to understand that. EFA is the international markets. That's also up, right? So what that tells us is EFA is just the ETF with international markets minus the American markets, right? It's also up. So essentially all the ETFs, all the markets experience that push higher. Now let's get into the individual names, and I'll give you my trade idea once we get through them. First things first, Walmart. Walmart is in consumer staples. So Walmart did bounce nicely off that 200 EMA. If you like Walmart, did go buy block here. If Walmart pulls back a little bit, watch Walmart off of that 91.50 or that 90 psychological level, between that 90 and that 92 range. If Walmart can pull back into that, show some strength, this thing can be a nice swing trade back to the upside, potentially back at that all-time high. Walmart, it continues to push higher. And the entry signal for Walmart that I provided maybe a year ago was at that 65, right? And a couple people did take advantage of that. So Netflix reported earnings, and Netflix bounced right off of that near that 200. And if we throw our illustrations back on, right, where did it come off of that zone? The zone right above that 200 continues to push, downward compression, break, all-time highs on Netflix. Netflix's earnings call is on the channel, so go check that out. We talked about Netflix as well and how that's a great name. I was talking about Netflix 3 weeks ago. Palantir is back above that 100 psychological level. So Palantir is my trade idea for the week. So Palantir, I'll provide more detail in the Discord, but Palantir, I like this strength that Palantir is showing, and preferably I would like Palantir to open up with a little bit of weakness. If Palantir can open up with a little bit of weakness, it will give me an opportunity to take advantage for a continued push to the upside back into that all-time high. So Palantir, beautiful bounce, came into the zone right here. The zone lines up nicely with that 200. Between that 63 and that 66, continues to push higher. It's above that 100 psychological level. Now start using those psychological levels. We have the 100, the 110, 115, 120, so on and so forth, right? Microsoft, same thing, is trading below those EMAs, so it still needs to clear those EMAs. So Palantir is the trade of the week. It's at 112. Next week we will see what Palantir is. It's at 112 today, or 112 on the close. So Microsoft, a beautiful structural retest off of that break. So high, break, retest, bounce. So the reason why it's great, it pays to be a technician on the lower time frames, is because what ends up happening is the same things that happen on the lower time frames, they play out on the higher time frames. The only thing is, we see this every single day. Now just try to apply this. I know these are weekly candles, but just imagine these are 1 minute candles. We've seen this pattern so many times. So it comes into it, retests, it continues to push higher. You'll get really good at identifying patterns if you're paying attention to lower time frame price action. Lilly, my favorite healthcare name. Lilly is on the verge of breaking through this channel, right? So Lilly on the verge of breaking through that channel. So pay close attention to this previous resistance that gave us a hard time. First run at that level, rejection, rejection, rejection. Second attempt, rejection, rejected this week. And let's see if we have enough momentum to continue past, right? To continue past this level. Right, to continue past this level. And that level coincides with that, let's say, 928, 929. So basically that 930 territory. At 930 psychological level territory. So Lily, very, very interesting to see what takes place there. If we can break above these levels, break out of that channel. Meta does report earnings this week, and Meta, I was looking for Meta to pull back a little bit more, right? My eyes on Meta were here, so couldn't get that pullback this steep. If we did get that pullback, no question, that's all. That's like a must buy, right? Load the boat price all the way down here. Couldn't pull back all the way to that level. Now Meta is trying to reclaim that 50. So that 50 is the theme of the week, guys. That 50 EMA on the weekly, on the Qs, on the SPY, and some of these individual names, right, is the critical level to pay attention to. So if you're an intraday trader, I challenge you to do this. Find out what that 50 level is on Monday on the SPY, QQQ, and DIA, and whatever individual mega cap name you're trading, find what that weekly 50 is as well, and put it on the lower time frames and pay attention to that relationship. So that's what I would do. If I was trading Meta, I'll pay attention to the 50 on SPY, pay attention to the 50 on the Qs, pay attention to the 50 on Meta. And I want to monitor that interaction along with price action and along with the intraday key levels. Okay, and that will present you with a beautiful opportunity with just the right amount of confirmation. So again, nice bounce once we grab the lows of September 2024. Moving along, Tesla, where did Tesla stop? Came into that 200 EMA, right? 200 EMA, bounced off that 200 EMA with the help of earnings, despite missing, right? Nothing really sounded optimistic. I was listening to the earnings call. Nothing really sounded too optimistic about Tesla, but with earnings, you never know, right? It's just a matter of something is so devalued that funds have no other option but to put money in it because of the risk reward, right? The risk reward with Tesla, when Tesla was at 220, it's already down 50+%. So what's just imagine the risk reward if you're a hedge fund, right? Very good risk reward. Amazon is at that 188, came close to that 200 as well, continues to show relief, again below that 50. Google reported earnings last week, right? Again below the 50, same kind of thing. Apple also below the 50. Apple came right into this territory right here, right? Initial formation, bounce, comes into it, bounces again, accommodated with that 200. Nvidia, last but not least, Nvidia. So Nvidia also below that 200. Are we surprised? Right? So smart money is taking Nvidia here. Right? So let's see if Nvidia can get above that 50 and potentially break this down, this channel, downward compression. It's very clear to see we have that weekly downward compression. If we continue to accelerate to get past this and break out of this compression, we got to get above, no surprise, the 50. And the 50 is at that 115.45. Right? So keep in mind, guys, Nvidia at some point in time was at 86. If you picked up Nvidia, so when everyone was running around and panicking, right? When everyone was terrified to touch Nvidia at 86, and if you picked up Nvidia at that time, you're already up close to $30, right? Because you know what you're looking for, you're blocking out the noise, you're making the decisions, and you're taking it because you have the technical backing, the fundamental backing, and you're just letting it play out. So very, very interested to see what takes place there. So guys, pay attention to those names. Hopefully you found value from this. If you are joining us on the live right now and you are in Discord, we're going to jump right into the Discord. I'm going to get my presentation ready, and we're going to go right into our options chain, options contracts, and then I'm going to open up my Webull, and I'm going to show you how I set up, right from scratch, how I set up my options trading platform. Okay, so quick way on how to make quick orders, quick decisions to get the best fills, the best execution, and I'll show you a couple of tips and tricks through Webull. So again, if you're on the live from the Discord, jump in the Discord's trading floor. I'll share my screen, and then we can go there, and then we'll break it down. So again, guys, everyone else, thank you for tuning in. If this is episode 4, make sure to tune in every single week. Saturday, 6 p.m. We recap everything, comprehensive recap of what took place the previous week. And then we also have an outlook. We kind of look forward to what can potentially take place in the upcoming week, right? So again, make sure to also join us every single day. We host the most value-packed live options trading show with a comprehensive pre-market program, followed by live trading. We got a ton of people in there from across the world that join us, that provide great insights, provide trade ideas, that provide a sense of community. So make sure to join and take advantage of the opportunities that are presented through the show. Okay, so Monday, 9 a.m. Eastern to 1 p.m. Eastern. So thank you for tuning in. Have a great rest of your weekend. Stay safe. We'll see you guys on Monday. If you're in the live from the Spy Strikers, we'll see you on the other side. Everyone else, God bless you. We'll see you on Monday. Take care.